the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys. Hold the bottom.
That kid's got some eyes on him, doesn't he?
The bottom.
Yes, sir. We're so
we get like
back.
10 days of green candles throughout the entire year.
Back.
You can't sell because there's 10 days throughout the entire year when we go up, and you don't want to miss it, so you can't sell.
I'm going to go ahead and phone a friend here, Mr. Bernisky, and ask him what he thinks about bouncy balls. You know, maybe not the type of bouncy balls you used to play with your mind, you know, with the tisms going on with the colors back in the day. You know, I know that probably triggered you, sir. But really the bouncy balls of the bearish market phases where
bouncy balls inside my head.
You get these bouncy balls.
Those are my ideas.
Like they go down and they bounce, and it's like, oh my God, it looks crazy. Then it goes down again. It's like bounce. It's a bouncy ship, man. Hold on to your horses, all right?
Let's talk about the 4-year cycle, because the belief that this is a dead cat bounce, maybe we get to 97, right? And then we sort of go back down into the depths of a bear market, prolonged bear market, something like a year plus. That would confirm the 4-year cycle, no?
I think it would. I think what would throw people off the most is if we just keep going higher in like a slow fashion, but then have like a shorter kind of like not so deep bear market that
didn't that already happen?
Rips everyone's mind apart.
I mean, 120 to 80. I
mean, yeah, it's been about a good 3 months bear market. That's kind of where we're at. We're gonna get these like shorter bursts of speculative like trends, I think. So yeah, I think the 4-year cycle is over. It's cooked.
Okay, but the 4-year cycle, you got it. There's a choice out there right now for people to take. You either have to choose that the 4-year cycle is over and we're going to new all-time highs.
Yeah.
Or the 4-year cycle was right. It's always been right, and it'll continue to be right. And we're going lower. This is a dead cat bounce. And we get a dead cat bounce and we go lower, and the 4-year cycle is right. And so I don't think you can get it.
I don't think it's that black and white.
I don't think you can get it. But the 4-year cycle means this is a dead cat bounce and we're going to go lower. The 4-year cycle was wrong.
But I think that's wrong.
That we're going to go to all-time highs.
No, I think you're missing it.
How can
you're missing the reality? I think you're missing the key difference. It's not that the 4-year cycle is over and that we have to go to all-time highs, or it's not that the 4-year cycle is still on. We have to go into a bear market. I think the more reasonable possibility is the 4-year cycle is not over, but the any sort of downturn or speculative downturn is going to be muted and shorter, and any sort of upside is going to be muted and shorter, but we'll get these bursts in between. And so I think like the situation that you're not accounting for is lower for a shorter period of time,
like already
higher. Yeah, like what's already happened.
3 to 4 months of bear from 120 to 80 is like what you're talking is what we could consider a mini bear, right?
I agree. Yeah.
And if we're talking about like
Yeah.
shorter cycles or cycles with a higher frequency, then we don't get a 2-year bear market. We get like a 3-month bear market, and then we get a pop, like a 3-month bull and another 3-month bear. And we kind of flip-flop rather than up for 2 years, down for 2 years.
Yeah.
We just kind of flip-flop between like monthly cycles rather than yearly cycles.
Yeah. Yeah. No, I mean, look, yeah, it's a conversation that is like never going to end because it's like this and that and speculation.
Well, I think if we go to all-time highs here, it basically says that there's the 4-year cycle is done.
Is over.
Is
over. Yeah, I agree with that.
I mean, we saw what Bernstein put out a projection 2026. They're saying 4-year cycle is over. We've essentially sustained higher levels, and we're continuing this upward ascent slowly but surely.
Yeah.
And what you're talking about is that essentially it's like slowly but surely more muted volatility. Right. So like we don't get these like bull runs where the entire market goes up at once. We kind of get like a more almost like you treat Bitcoin like the S&P.
Yeah.
Like the S&P basically on average is going to go up 2% to the right every day. Like not 2% every day, but like very gradually as these companies make money. They don't go through these wild speculative cycles.
No.
Like
that's kind of where Bitcoins are.
Bitcoin's, and we kind of knew this was happening. It was like this S curve where as more of the supply came onto the market and the block reward and the inflation schedule of Bitcoin, what had less of a significant impact on the market, we were going to gradually smooth out the volatility and the cycles of Bitcoin price movements were going to get less.
Yeah, well, that's where Bitcoin is. But that doesn't mean that Bitcoin's not going to have bear markets anymore. And like people calling for like 70, 60K Bitcoin, if that's like the bottom of the bear market, then we should consider ourselves lucky.
So that would be about a 50% from all-time high, which is probably less than I think it is less than what we've seen top to bottom in previous
like
cycles.
The thing went from 72K to freaking 14K last time.
Man, again, if you think that we're going to 60 or 70, then you think the 4-year cycle is right. You think this is a dead cat, and you think that we're going to go to 60 to 70 in the near future.
I think
that's not muted. Like maybe that's like from 75, 85% downside. That's a little bit muted, but that's still a bear market.
No, I know, but they're going to stimulate the absolute balls off this economy. And I just don't know if that's going to happen and have a material actual liquidity impact. Because like guys like Raul Powell will be like, yo, like you got to follow the debt and they're going to refinance the debt and the liquidity's up only. So it's only a matter of time. And I think that's probably right. I just don't know if that's Q1 2026. Is it Q3 2026?
I think we get maximum speculation going into Q1 of 2026. Trump's going to replace the Fed chair. This is already starting to get priced in.
Yeah.
Like we know he's going to cut the rates and pour stimulus into the economy. I think we get I think it's a buy the rumor, sell the news.
Yeah.
I think when the Fed chair does get in, that is when we're going to see a slowdown over like the summer. And then we're going to have midterms at the end of next year. And we know that they're going to try to pump the markets ahead of the midterms, basically show that they're doing a great job.
Yeah. All right, guys, we got, I mean, look, man, you go ahead and trade your book and let me know how
you like to play it both ways. I'd love to hear straight take from you on where you think things are heading. Maybe we'll after our first guest, we'll have
I'm in the privileged position of being long, strong, and feeling amazing about my core holdings, while also the day-to-day fluctuations don't really matter, man. We made it. We did it. Like I no longer like we're chilling, you know?
You sold the bottom. Let's get our first guest up. We've got the co-founder of Tezos. Tezos has been around for so long.
Oh my gosh.
One of the OG projects.
Arthur, what's up, man? How are you?
Arthur is here. He's on the show. Welcome to the show, Arthur.
I'm all right.
Yeah, man.
Hi, thanks.
Sure. How you doing today?
First time on the show. How are you?
Good, man.
And,
I'm all right.
Maybe we could just get a little bit of background a little bit of the lore behind Tezos. How did you first get involved in the industry? How did you get into the place of finding Tezos?
Yeah.
Yeah, I mean, I got exposed to Bitcoin super early on. Like I think I had some friends tell me about it even when the paper came out, but I didn't pay attention to it until like 2011, which is still very early. That's when I started paying attention, and what really drove my attention were like the whole agorist aspect of it. People like doing online marketplaces using Bitcoin. I thought it was super exciting. I got interested in the idea of prediction markets in Bitcoin. It was like around 2012. And but then I got deeper into the technology, in particular the different method of consensus, smart contracts, privacy, all that. And that led me to think about how do you evolve a system like Bitcoin, when there's just so much happening in this space from an R&D perspective. How do you keep a system decentralized and evolving? And that's the idea behind Tezos. It's as decentralized while at the same time being able to create.
Where's that blazer from, Arthur?
I think it's called Isaiah. It's
Nice.
a
I mean,
Nepal
we're in the blazer wearing era of this industry. I mean, you've been in this industry for what, 10 plus years now. I'm not sure that we always had to wear blazers, did we?
I don't have to. I like wearing a sports jacket. That's the thing, is like people say, oh, it's like you look formal with a, if you have a suit or a jacket, just wear a t-shirt and a hoodie. But like, if you have if you're in great shape, fantastic shape, like t-shirt will look good, but like you have to pull it off. That's the thing. It's like jackets and all of that, they make you look good. I think we need to. I like, with a sports jacket, it's not as formal as the suits, but you still get.
You absolutely do.
Look
Looking fly, man.
So
and I think it is indicative of how the industry has evolved over the last few years.
Oh yeah.
We are now seeing these mega financial institutions come in. We're seeing banks adopt crypto as pieces of collateral for loans.
Oh,
We're seeing all of this early tooling be integrated into the banking infrastructure, the legacy banking infrastructure. Now they're accepting this greater technology. And it really feels like we've evolved from a technology space into a finance space. Have you seen this evolution at Tezos? How have you been tracking the progression of this space? And generally, how has the vibe shifted, the sentiment? Have you seen this from your day-to-day operations, or what's your perspective on how you think the space has shifted over the last few years?
Well, first, to answer the question very trivially, how do I keep track? I'm reading the press, talking to people, going to conferences like everyone else. But it's true. There's definitely been an opening, and partly, I think it has to be with the US no longer trying to kill the industry. It was very difficult, even internationally. Well, you had many different government agencies in the US actively trying to shut down the industry. That made it difficult for people to participate. Now that that's over, that creates a lot more interest. And we've seen this in a few areas. I think no area has been more successful from the perspective of traditional finance as stablecoins. They have, really been a bit of a killer application, which is, it's both a victory and a defeat in some sense. It's a victory because the technology is being used to move billions. It's working really well. People are adopting the technology. It's reducing intermediaries, reducing costs, but at the same time, it's not replacing money, right? It's taking another form of money and putting it on rails. In some sense, I would say cryptocurrencies and blockchains were designed with the idea that stablecoins would be shut down. Anything like a stablecoin would be shut down by a government. People have tried to do mints, centralized mints, and the problem is not so much you to trust the mint. The problem is like anyone that's like big enough to be trusted is big enough to be regulated out of existence by a government. But that government has said, we're fine with stablecoins, which in a way is not technologically neutral. They're not fine with operations like a stablecoin if it's not on the blockchain, but if it's on the blockchain, it's okay now. So that changes a little bit the landscape of the industry. It's gone beyond that. It's gone into investments as well, so to a lesser extent, but nonetheless, we see tokenized commodities like gold. Uranium is also available on Tezos. That's one of the projects I'm super proud of.
Interesting.
On uranium.io. But yeah, it's starting to it's starting to converge a little bit between traditional financial industry and what you see on blockchains.
Yeah, man. Would you say that Tezos, I mean, from my perspective, right, Tezos was one of the earliest companies to really exist around like 2017, like the smart contract era. Some could call it ETH killer. Some could call it, you know, alternative L1, different priorities, different types of L1 kind of functionalities and goals. Over time, it's shifted, you know, through all the different iterations of the space. So you guys had, you know, you built out your DeFi layer, built out your kind of NFT and collectibles layer, kind of built out a big team around institutional, you know, side of things. Now it's very clearly the stablecoin era, this RWA era, this institutional adoption era. Do you feel like you're pretty well positioned for that? I mean, I'm curious, like, what makes you guys particularly suited for RWA rails compared to other L1s or other chains with more like speed first or tech first roadmaps?
Yeah, so first I want to address something. Tezos is not a company. It's a blockchain. It's literally like a piece of code. It's a product that you can run. In fact, there's no company named Tezos itself. So there's a foundation in Switzerland. So I like to describe it as a wealthy patron to the network. Essentially, what it does is like it helps with the growth of the network. It does a few initiatives, but it's not Tezos. Tezos is Tezos. Tezos Foundation is something separate. It's also not even a company because it's a foundation, but nonetheless, Tezos is a network. That's a product. That's one thing I always insist on. Because if it's a company, then it does. You know, if it were a company, it wouldn't have a point. Like, why are you building a decentralized blockchain if it's a company?
Well, there's a labs company. Like,
run your ledger. You know,
what's the point that you're trying to make here? Like, there's a labs company. There's like a, you know, there's an operation company around it.
Sure, but there's a bunch of companies around a bunch of things. There's a bunch of companies around the Bitcoin ecosystem, but no one would call Bitcoin a company.
Yeah, fair enough.
And in fact, if you call Bitcoin a company, that would be disparaging.
I didn't mean to offend you, Arthur. I'm sorry.
No, it's okay. It's a very common. It's a very, 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 very common misconception. So that's the second thing is you mentioned that it was ETH killer. The only people who have ever used the expression ETH killer are Ethereum fanatics. They're like ETH maximalists. Like, oh, you're an ETH killer. It's like, I don't care. I don't want to kill Ethereum. I don't care.
Arthur, what do you think about ETH
right
maxis?
Now is way big.
What do you think about ETH maxis? Do you not like them?
So first of all, I have nothing against maximalism. In some sense, I don't like the kumbaya aspect. There's two things. I don't like the kumbaya aspect of saying everything is complementary. We're in a multi-chain world. No, everyone's a competitor to everyone. Mm-hmm. Okay, and that's fine. But like, my point is, you don't have to be an asshole about it. Yeah. And that's the thing. It's like the problem is that the word maxi often comes off with like, and I'm going to be an asshole about it. Like, it's one thing to say I like Tezos. I want every use case to be on Tezos. I would like all blockchain traffic to just happen on Tezos. And I would rather it's on Tezos than on any other chain. Yeah. Okay. And I think it could. I don't think there's any, I think if everything could be on Tezos and there's no reason for any other chain to exist, I believe that. That makes me Tezos maximalist. Mm-hmm. But at the same time, I'm not going to be rude to people because they use another blockchain or because they like another project. Yeah. And that's
you're describing Bitcoin maxis, in my opinion.
Yeah, but it's maxis can be like that as well. There's a bunch of them. Yeah. When Tezos, So when Tezos had more hype, they really hated on Tezos.
I think you bring up a good point when it comes to the labs companies and how people are viewing maximalism and the decentralization theater, which was really like a pretty popular idea and concept and strategy in the 2017, 2018, and like even back to 2020, 2021. And so we've recently seen a lot of companies shift and pivot into a more pragmatic strategy, looking at institutions and saying, look, decentralization maximalism isn't necessarily the answer either. We actually need to centralize a little bit in order to move faster and have a more concise and succinct strategy. Have you considered that, or has decentralization always been the North Star?
For me, decentralization, first of all, is never a goal. It's a means to an end. And the end remains censorship resistance, seizure resistance, trust minimization. That's what matters. And from that perspective, you can look at centralization in two very different lenses. One is this lens of like, do I achieve these properties? Do I have a system where anyone can participate, anyone can validate, anyone can verify? Do I have these properties? Do I have what I would call de jure decentralization? There's no party with special set of keys. You go on Base, for example, there's a few people who have the keys, to like take all of the assets away from Base. Like that's a property. You go on Solana, you have an NFT on Solana. There's a small multi-sig that can repossess every NFT that's ever been like minted on Solana. That is de jure centralization. But then people focus on de facto centralization, which is silly. They'll say like, oh, but look, there's so much activity coming from this one company, or like this person has so many tokens, all of that. Those are not things that directly affect viability of the systems, and so they're far less important. The de facto and the de jure. It's funny because it mirrors a classical debate. Like it's a bit of a right-wing, left-wing debate where some people would focus on negative freedom and say, what really matters is like, you need to keep your freedom to do what you want and to have your own assets. And then the left-wing critic of that is like, no, but like, look, what does it mean to be free in practice if you have to like, work for a wage for someone who owns capital, all of that. And, in practice, it seems that from a pragmatic perspective, you should care about those positive rights. But in practice, what has always been true is that it's places and systems that focus on negative rights that actually achieve good outcomes. So I would say during this whole decentralization theater period, like they were so focused on this kind of like de facto decentralization as opposed to what really matters, which is de jure decentralization.
Okay. Do you think there are teams that are still falling prey to those today? Like what teams are still using de facto decentralization, not the de jure decentralization that you mentioned?
It's mostly it's really like the critics. It's like who are doing it. At the end of the day, a company is a centralized entity. So it's more of like who feels that they need to have a DAO, they need to do all of this activity around it to satisfy people looking for this de facto decentralization.
Mm-hmm.
And yes, definitely the emphasis on that has fallen. And as a response to the fact that there's no longer this legal persecution of the industry in the US.
Yeah, which has changed everything. You guys are working on some pretty interesting new kind of developments. You guys have an interesting self-amending governance process that you've been doing for a while. Obviously, you've got shielded transactions in Umami wallet. There's a bit of privacy element being implemented into this. You're also kind of trying to solve some of the AI alignment issues as well as just general existential challenges there. Let's start with some of the privacy stuff. How does Tezos as a blockchain approach privacy, and what is your personal viewpoint on privacy in terms of public blockchains versus private blockchains? How do you look to build a network that can support privacy with user protection and regulatory compliance, that's just general compliance in mind? Just give us your 30,000-foot view on privacy.
Sure. Just one quick reaction to what you said. You mentioned something about AI alignment. That's a personal interest of mine. So I talk about AI alignment a lot on my Twitter feed, but there's nothing in the Tezos ecosystem that's particularly related to alignment.
We wanted to talk about it though.
That's just a personal interest. On the privacy front, so Tezos has supported shielded transactions for a few years now, but really the UX to use it wasn't in place. There was a regain of interest in privacy in the past few months. You saw that. It's a couple of things. One is that the price of the Zcash token went up a lot.
Yes,
and people got excited at a moment. And I don't think this did not happen because people woke up and suddenly said, "Oh my God, privacy is so important," and we hadn't thought about it. No, it's hype build up and marketing and so forth. That being said, I'm super happy for the Zcash team. I'm happy for Zuko. They're really good people who worked on Zcash, and if they're getting a windfall out of it, more power to them. And also, but it did trigger conversations, and those conversations, people did realize that, like, what, it is true. Privacy matters. Privacy is normal. So it was a good indicator that perhaps it was time to build the UX around this functionality, which has existed now into this for a while. My view on privacy is privacy is normal. And people sometimes say like, oh, it lets you hide the transaction on the blockchain. And I say, no, you're not hiding anything. It's just that the blockchain is weird. It's a very weird way of transacting, where the only way you can make a transaction is by telling everyone in the world and by having like this untamperable proof that you've made a transaction, not a proof, but like a disclosure. You disclose it to the entire world, and that's how you make a transaction. That's weird, right? Those shielded transactions, there's a normal ones. They are, you're making a transaction, you're proving to the system that it's valid, but you're not going out and telling everyone on Earth about your transaction. You can tell other people. You should probably tell other people. When you file a tax return, you may have to tell the taxman about the transaction. It would be a very bad idea not to do that. But you don't have to broadcast it to the entire world. And this, it's been flipped on its head by the critics saying like, oh, privacy is bad, you're hiding it. No, you're not hiding anything. You're just choosing who you're disclosing it to, and that makes a whole difference.
Yeah. So I think the big problem with the privacy side was that people were not really comfortable doing anything because of incidents like Roman Storm.
Yeah. That was very scary, and I think the resolution right now is not perfect, and it's against the guidance that has been given by FinCEN, I think, in the past.
Yeah.
Nonetheless, the fact that it was removed from OFAC, I think, is it's a huge relief.
Yeah, for them, it's a big win for sure.
Absolutely.
I kind of just have a random question. I think people would appreciate understanding what you feel like is the core through line for Tezos right now. Kind of coming back to that RWA question that I asked earlier with regards to how you guys think about stacking up against other chains, or just generally what the strategy is there. In a similar train of thought, what is like the core objective of Tezos right now? Like, what are you guys trying to dominate in? What market niche are you excelling at? Like, where are you guys really excelling?
Sure. So I can't speak for Tezos as a chain because, again, it's a technology. But I'm a director here at TradeTech in Knowledge. TradeTech is an adoption hub for Tezos, and some initiatives from TradeTech have been around the real world asset aspect. And so I mentioned Uranium, which you can find on uranium.io. So we've tokenized Uranium. I think spot commodity tokenization is really interesting, and it's something that hasn't been done. A lot of tokenization projects have been focused either on like really long tail stuff, like here's one coconut farm somewhere and someone wants to tokenize it, and they tokenize it, and there's just like no liquidity, it's just primary issuance, or really like assets which are very, very accessible already, like we'll tokenize a money market fund which you can get anywhere, we'll tokenize NVIDIA stocks, we'll tokenize gold, like so many ways to get those products. And I was interested in like neither. I was interested in products which have a massive impact and are extremely are globally important, but lack trading venues. And
I love Uranium right now.
This
is amazing. This is a great website too.
Oh, thank you.
So
the team will be happy to hear
I read this book. Oh man, do I have it right here? Oh yeah, I do. So one of my old mentors gave me this book here called Rise of America. Okay. And in this book, he effectively talks about kind of what's happening today. I read it like 5 years ago, and he talked about how there's going to be just different fiscal policies getting towards modern monetary theory. He was just essentially kind of really firmed up the debasement theory, or the debasement trade, if you will, as an investment concept, but actually like thinking about what is going to be applied. Precious metals was one, crypto was another asset class, semiconductors was one, rare earths, which we've now seen all this problems with China about, uranium was one. And so I think I gotta go buy some tokenized uranium and listen to my boy Marin Katusa, because you got me bulled up, and I can just use my stable coins and do it. I was always one. I mean, I guess you can just buy futures in the market right now and stock and like Schwab or whatever, but
no, they're not liquid. There's no liquid future. Like if you want to buy uranium, spot uranium, your options are uranium.io. That's the best one. And there's there's closed-end funds. So there's a closed-end fund by Sprott.
Okay.
That's probably the most popular one today that exists for uranium, but it doesn't track very well. It's a closed-end fund. So it can be off by 15%. So the tracking error on it is pretty big. And there's another one in London called Yellowcake, and that's it.
So uranium,
if you want uranium,
up 3 times off the lows since 2020. January 1st, 2020 was $25 per pound, if I'm not mistaken. And then now it's $76 per pound.
It's good. It's grown quite a bit.
And it all-time high at about 120 or 102 in January of 23.
102, that's possible.
102. I don't know. You guys don't have it all the way back on this site to
I see.
But I was looking at the futures markets. But either way, so I can buy and sell uranium in size on this website.
The liquidity is big enough. So if you have, if your size is multi-million dollars, you can do I would do OTC trades, which you can do. Right now, I think if you are buying, in tens of thousands or hundreds of thousands, and you break up your order a bit, then you will have more than enough liquidity.
Okay, so maybe can you help me understand how this works? I mean,
exactly. How have you been able to arrive at a more liquid market for uranium than futures?
Well, the futures don't trade. It's just period.
That's what I saw.
So one of my theories is you often, in order to have a liquid futures markets, you need a spot markets,
right?
And especially for uranium, it's a bit less true. But the problem is that for most things, most people are going to want to be long, right? So if, let's say, take a real estate future, the CME also has real estate futures. They don't trade. And the problem is a lot of people might want to be long, but who's going to be short on the other side? It's like, if you're excited about uranium, most of the interest will be long interest. And then who's going to take the other side? Like someone who wants to make a bet, so you have to push the price above the spot, or you have to have this weird funding rates mechanism. Whereas if you hold a spot, at least someone has the opportunity of doing a spot futures arbitrage, or basis arbitrage, just holding the spot, shorting the future, and then letting someone else buy the future. So it really helps you to have the spot markets.
I love it.
And how have you been able to arrive at a very liquid spot market?
I think the liquidity is still bidding up. I wouldn't be comfortable saying
it's very
liquid.
Liquidity?
But it has some liquidity.
Who's providing the liquidity?
There's some market makers who are involved in these markets.
Understood.
It's both on its smart contract. So there's a order book based smart contract provided by Henji, which is a DeFi protocol on Tezos, and it's also available on some exchanges like Gate.
I'm making an account right now.
Arthur, I also want to ask you
Sorry, Arthur, I'm just fired up, man.
Very good.
I also want to ask you about the tokenomics more so. Yeah, before we move off uranium.
Are you moving off of off uranium? All right, so real quick, Arthur, could you give us what is the uranium thesis? I'm a crypto investor. I bought a bunch of gold in the last bull run after I sold a lot of crypto. I bought some property. I'm bullish on this debasement trade idea. I'm just very, very set on dollar devaluation, fiat devaluation. That's the crypto in me. Why is uranium something that is worth investing? Or what is the uranium thesis? Not financial advice. Why? What is this thesis?
So the first thing is that attitudes around nuclear power has changed, and there's been international change around it. The main opposition to nuclear power was environmental. And because global warming has become a bigger issue than other environmental issue, the fact that it provides low carbon, low emissions, or almost no emissions source of energy means that it's more popular now. And once you have once you have a source of energy that's popular with more than 50% of the voters, you see that it changes. So the economics are good, and because the economics are good, all it takes is for popular opinion to change before government starts allowing the construction of more nuclear power plants. So that's number one. It's just this kind of generational trend in allowing the source of energy, which has been, artificially limited in the past. The second thing is there's a projected demand in the increase for energy, which is huge from AI data centers. And you're seeing hyperscalers like Microsoft, Amazon actively building or restarting nuclear power plants. Everyone on Earth now, they're rebuilding, they're restarting nuclear power plants.
They're also doing it in space.
Policies. I'm not sure it will work well in space, but
the Google CEO keeps talking about it. But please,
I don't get it.
Nuclear has gone from very taboo to not so taboo, a bit more open legislatively, and then the economics of the actual element here or of this rock, let's just say, is good. There's good economics, so keep building here.
There's a caveat. Okay. The caveat is in any commodity investment, timing is super important, because there's this concept of elasticity, which is if you increase demand for it, how much does the price move? Short term, elasticity of uranium is very low, right? If short term you say I need all this uranium and I need it right now, price going to raise. But as you do that, more people start looking for mines. Most people will start digging uranium out of the ground, and the price goes down. And so right now we know we need uranium, but it takes a while to build the reactors and it takes a while to build the mines. And so the question is like, what is going to be slower, building the reactors or getting more mines out? And if you get a bunch of reactor and the mines are still lagging, right? Then you see a spike in the price of uranium, because reactors will buy it. The fuel is such a tiny component of like a reactor. Once you've spent billions building your nuclear reactors, you don't care how expensive the uranium is. Like your main expense is your amortization of your capex. You're just going to buy it at any price. But which one is going to happen first? Because if people are saying like, oh, wow, we forecast lots of demand for uranium when all those nuclear power plants are ready in 2028.
Yeah.
Therefore, let's start digging now. I still think it takes a long time to get those mining projects going. So we can still see appreciation in the uranium.
Okay, so your perspective is that the mines will be slower than anticipated. So let's just say going into 2030, 5 years, right? 4 years.
Yeah.
How do you anticipate that elasticity equation playing out? Like, what would your like forecast or thought be like with regards to the speed? I'm not going to ask you if it's a good time to buy or anything, but like,
no, that's so certain.
Yeah.
I don't know.
Okay.
I think in trading, if you if you're making a coin flip and you have a 51% probability of like getting the coin flip right, that's already pretty good.
Yeah.
So I think uranium is quite interesting. I can't know for a fact, like what's going to happen with even more with oil, like that's super well studied.
Yeah.
People have had surprises with how much oil is found. Like tomorrow, it's possible that we hear that they found this giant amount of uranium in Canada somewhere that's super cheap to get. And I can't predict that.
Yeah. Yeah, they're certainly pouring research and development into finding those mines, but it seems like they're pouring a lot more into the data centers and a lot more into the reactors, and even geopolitically, it's becoming a lot. It's taking up a lot of the priorities when it comes to policies.
Do you mind if I just read you a quick passage, Rob and Arthur? So just real quick, in the recent years, there's been a renewed interest in nuclear power plants. Some call it a renaissance. As of May 2020, there were 54 facilities under construction, with China having 11, India having 7, leading the way. It's a boom everywhere but in the US, which only has 2 units under construction, with another 6 permitted, as opposed to 37 facilities permanently shut down as of February 2020. So that was 5 years ago.
Yeah, 5 years ago. And with Trump's, bring onshore a lot more of rare earths and a lot more production and reduce dependencies on China, we've ramped up the plans for a lot of those reactors. But to Arthur's point, it takes time after we've started planning. Now we're going to start digging. It still takes time to go and find the uranium.
I wish we had some numbers on the state of the amount of growth since that passage, because that sounds unreasonably small for the US. But guys, we're coming up on time here. Anything kind of just to close out, or this has been great. This X308 thing is very interesting.
Anything for me to close out, or do you want to?
Rob, I don't know if you have anything else. I mean, I'm just generally just curious. As I guess I could ask a bit more specifics, like how do we get started here? But
my last question was, we talked about the uranium thesis. I was curious a little bit more on the Tezos thesis, specifically with regards to the Tezos asset. We've seen tokenomics, and you guys are still doing quite well and have been able to sustain a high market cap as a project that has survived longer than most projects. And so I was just curious, as you're thinking about inflation, we've seen a lot of L1s, we've seen a lot of projects reduce their proof of stake inflation schedules. I was curious if you had any takes on this, or generally how you see the tokenomics of Tezos playing out over the coming months and years.
Yeah, so they changed massively in June of 2024. So the Tezos model used to be essentially like there's some fixed amount of inflation, 5%, but most of it ended up being redistributed to people who delegate. And in fact, because not everyone bothered to delegate, in practice, you would get more by delegating than the amount of inflation. So like historically, if you're delegating on Tezos, you've always beaten inflation. Now you have to stake to beat inflation, but it's a lockup of only a couple of days. And the way it works now is like the amount of issuance that happens on the chain automatically is a function of how much is staked. So the more is staked, the less issuance that there is. So you have an automatic balancing mechanism that happens, which you see in other proof of stake blockchain, but this one can it doesn't try to have a floor, or the floor is very low. So right now, the staking yields about 10% a year, whereas inflation is around 4%. But the goal is to drive it down under 1% by having more people stake.
And so recently we saw, like, for example, Near did a 50% inflation cut. So Solana's talking about it. Even Celestia had been talking about doing a proof of governance going down all the way to 0.25%. From your perspective, maybe a difficult question, did Tezos spend too much expenditure on inflation compared to the actual necessary amount of network security that proof of stake consensus provides?
100%.
Yeah.
100%. There's way too much is being like paid to secure networks.
So you guys are aggressively working to kind of change that then?
Yeah, but all that work was essentially done in June, and since then we've seen the amount of staking steadily increase on the Tezos network. It's currently around 27%. I think right now it's mostly an awareness issue. So I think what it needs is a bit more hype building upon Tezos, a bit more people taking a fresher look at it, getting back into the ecosystem, and even when they do, I think they'll stake, which will drive down the rate of issuance. Now, it's not enough. Even if you have a rate of issuance of 0, you do need also to have sinks, and so a sink can be transaction fees. But Tezos is scaling. Every blockchain is scaling, but I think Tezos has been leading the way in terms of the R&D there, and the transaction fees, I think it's going to be very hard for any blockchain to burn a lot in transaction fees. And so probably what you'll see is, I think, either like partnerships in some form, whatever form that might take. We're calling it a partnership between apps and chains, so that more of app revenues actually flow to the chains.
Okay.
Interesting. Because if apps are going to have to sustain the chain token value accrual, then it's like, well, what's the reason or the rationale behind an app token?
Well, that and also stablecoin proliferation has changed the entire dynamics of how L1 tokens and L2 tokens as well operate. It's because they're not necessarily the trading pair for all the DEXs anymore. Back in the day, you used to always trade to ETH. Every Uniswap V2 pool in 2020, you couldn't go from USDC or asset to USDC. You literally had to route through ETH first and then go to USDC. I know it changed and evolved, and they do like multi-swap routing across all DEXs now, more or less. But the stablecoin proliferation, I think, also changed the dynamic of token understanding for L1s and L2s, but especially proof of stake networks. Do you agree, Arthur, or no?
Yeah. I'm not an expert in the stablecoins area. I think it's where I was going to is more on the idea of so a long time ago, people had this fat protocol thesis saying like, oh, most of the value accrual from the applications on the chain are going to accrue to ZL1. I don't think it's panned out, but you can make it pan out essentially by nationalizing applications. So like there are some really commodity applications. I don't mean commodities. I mean like there's some basic features like having a DEX, having perps, all of that. And you want to have a vibrant ecosystem, but not now, not in a year, but in the future. At some point, a chain can, like the governance of a chain can say, look, there's a lot of revenues in this app. We can build them at a protocol level and capture that revenue and become fat in this aspect. And that's always been the idea, I think, in Tezos, to capture the sources of revenue in the long run.
Yeah, makes sense. Awesome. Arthur, I think we're out of time, but this has been tremendous. Just to wrap up the uranium conversation, we did get a fact check, and it says that nuclear reactors powering data centers are growing much faster in the US than uranium mining. They're actually still just reopening uranium mines following a COVID slowdown. So very interesting conversation on uranium, and uranium.io is where everyone can find access.
I'm going in. I'm buying a bag. I'm buying a good solid size bag of uranium. I'm listening to my boy Marin Katsusa, and we're gonna do the little uranium endeavor here as my diversification plan continues to evolve. Arthur, thank you so much for coming on and bull pilling us and giving us some of your time. I know you've been in this space for a long time, seen a lot unfold, so we appreciate it. Cheers, man. Bye.
See you next time,
Thank you
Arthur.
very much.
All right. We are going to roll straight into Jason from Daylight. It's going to be another conversation about energy. So it should be a good one.
Yeah. Oh, yeah. I like the through line here. We're going to go straight from uranium nuclear energy, and I believe Daylight is working on solar, right? So we're going to talk about the financial layer for decentralized energy. Daylight helping households generate, store, and share power. Jason's ready in the back. Let's bring him up. Without further ado, we're going to go from uranium, tokenized uranium products. Maybe Jason will give us a little bit of the juxtaposition between nuclear.
That's right.
And
That's
solar.
what I think so, man. I mean, I'm bowled up, man. I'm thinking a little 50 bagger of X308 is on my Christmas shopping list here at $4.77 an ounce, all-time highs of 662. If we think Bitcoin's going to $250,000 because they're going to devalue the shit out of the dollar, then we can assume that other commodities that are scarce will also do pretty well. I think I'm going to have to buy that.
Energy.
Jason, are you
in that
welcome to the
category.
show? Are you a uranium bull or are you an uranium bear?
I'm an energy bull.
Okay.
And so I think we are in a world where we need to build more of everything, and all inputs into that are critically important. So
Okay.
uranium to solar panels, we're bullish.
Yeah. Yeah. I mean, I was showing our last guest, Arthur, the co-founder of Tezos, this book here. It's Marin Katusa's The Rise of America. And he talks a lot about the different American, basically like he predicted the re-onshoring of a lot of the things that now like this new administration has done, or has at least started in some way, which
Sure.
I think will probably accelerate. And I'll find it during the show, but he talked a lot about other forms of energy. So I guess like let's just start off here with giving us your like the decentralized energy kind of thesis. Like, give us the bull case. Why should people care? Why is it something worth investing in? How do we really wrap our head around like, okay, with these amount of inputs, this is the predicted output? Kind of give us the thesis here.
And let's not bury the lead here. You guys announced DayFi, which I believe is going to be your answer to this
Beautiful.
question. So let's talk about DayFi, and let's talk about how you guys are turning the electricity industry into an investable asset class.
Amazing. Yeah, well, it's great to be here, guys. And I appreciate the time. If we take a step back, energy is the constraining factor to the next, decade plus of progress. Everything from AI and compute, but Andy, you hit it right. Reshoring of industrialization, deglobalization, like the fragmenting of supply chains, leads to an incredible increase in electricity demand. Autonomous vehicles, electric vehicle fleets. If we want to see Waymo grow, we want to see better products than what exists on the market grow. That depends on more electricity delivered when the market needs it. Robotics, all of this demands massive increases in electricity. And so we're in this world where for the last 20 years, electricity demand growth in the US was basically flat. And over the next 10 years, peak demand is set to almost double. And we need to find a way to solve this problem. The problem is centralized generation really isn't the solution. It's simply too slow. It takes too long and it's too expensive to build all the new transmission infrastructure, all the interconnection process, all of the surrounding infrastructure in order to build a massive power plant in the middle of the desert, connect it into the grid, and pipe that electricity in. Simply too slow and expensive. Quick data point I'll give on this. Traditionally, every power plant goes through something called the interconnection queue. 10 years ago, that queue took 2 years to review and approve. Today, it takes longer than 5. So before you can even start construction on a new power plant, we're talking about a 5-year wait time. Distributed energy is the cheapest and fastest path to scaling new energy capacity on power grids, without a doubt. You totally circumvent this process. You circumvent the need to connect it in with new transmission and distribution infrastructure. You can deploy it in a matter of weeks on power grids, and you can use it to scale energy.
Did we lose Jason?
I don't have them. We're just gonna flip back for a sec.
Yeah, let's get Jason reloaded because he was going on a rant. I think obviously
I know,
energy is the way to go.
Dude, I've got the part of the passage of the book up.
Oh yeah. Okay, so why don't you read the passage here?
Yeah, it's short. I'll give us like the TLDR here. So, basically we just you're back now.
Yeah, we got you back.
We'll get you up in just a sec. Leo, just bring him up. We've long known that sunlight can be turned into electricity, but the challenge has been a way to capture that energy, somehow convert it into a usable electricity in a cost-effective manner. Obviously, we're in the sunshine state. We don't really have that problem. And Jason, we'll bring you up ASAP. We're just gonna make sure that you're all set. I think we just dropped you for a sec. Basically, we had all these advancements in technology for solar. As recently as 2010, if I had told you that solar would emerge as a major factor in global energy production, you'd have laughed and said something as if, dude. Everyone knows that solar panels are too expensive, too inefficient, and useless on cloudy days. But one modern advancement in technology leads to the next. And here we've got Jason back up on the screen. And basically, by the end of 2019, the total gigawatt power increase from 2000 to 2019 was an 81x, enough to power 15 million homes in that 20-year period. That was 6 years ago. That number is posed to soar another, I don't know, a couple hundred or a couple tens of X's probably by the end of 2030. And yeah, we'll get into some more of it. But Jason, you're going on a huge rant, so please continue.
Yeah, where'd you lose me, Andy?
Man, I just went on a rant too.
Man,
so
let me just.
I kind of lost it.
Yeah, that's great. let me summarize it. Right, centralized development of energy is simply too slow. Distributed energy is a huge time and cost arbitrage on building new energy capacity for power grids. It can deploy in weeks rather than years. Doesn't go through the interconnection process. You don't have to build all the transmission infrastructure around it, and it can provide immediate savings and reliability to whoever hosts it at the same time as creating new energy capacity for power grids. And so that's why we think distributed energy is the answer to how do you scale energy production double, tenfold over the next 100 years. It's all about distributing, decentralizing, and scaling energy everywhere we can. And so Daylight is focused on building capital markets for distributed energy to make this as robust of an asset class as possible, because it is the most critical new energy source we have to scale on power grids today. And so DayFi, to your point, Robbie, is kind of the introduction of the DeFi side of Daylight, where we're building this globally available yield coin product tied to revenues from distributed energy projects that makes electricity yields available on chain, liquid, composable, and is a totally uncorrelated new asset class for DeFi.
Jason, I keep hearing you say decentralized energy, right? And so is Daylight inherently is it only for solar, or is the core product here the financial layer on top of decentralized energy? And this is applicable across liquid natural gas, across nuclear, across all sorts of other renewables beyond solar.
We're focused on distributed solar and storage today. So batteries and solar, fuel and storage is the kind of critical layer that we're looking to incentivize and build at Daylight. Because again, what we're looking to solve is bottlenecks on power grids by distributing energy across the power grid. Daylight uniquely is not just a financing layer, right? One of the right ways to think about Daylight is as a decentralized electric utility. So we have the incentive layer that will incentivize hosts and users to come to the platform and deploy energy capacity on the network. There's the network layer that aggregates all the data and forecasts and verifies and measures everything that's being provided into the network from this kind of decentralized group of hosts. And then you have the capital markets layer that is financing the infrastructure and making it available and easily deployed in a way that removes a lot of financial barriers to entry. And all of these pieces come together in one verticalized network that allows the protocol to scale effectively as quickly as possible.
One thing about solar is, so I bought a house like a couple years back. We ripped the solar panels off. It was a piece of crap roof. I had to get rid of them. And what was really annoying was actually you had to have this company come out and take the panels off, and they would have to store them, and then they'd have to resell the panels to somebody else. And there's this whole freaking physical problem with panels. It's like why Bitcoin's great, because you just throw it on a ledger, you bury it, and you're good. With solar panels, there's this storage issue that I think is being solved, but I think that would cause some obstacles and some issues for you guys. How do you guys think about this storage issue with solar? And am I over exaggerating this? How do you think about this?
Are you talking about physical storage of the panels themselves?
Yeah, I think both actually. I think it's well, but I'm not that educated here, so I'm just trying to sound like I know what I'm talking about based on my boy Marin here. That I can read you the passages, but I was trying to let you rip it here.
Yeah, anything you do in the physical world is clunkier than the world of bits, and that's the nature of building physical products. But also, physical products and physical networks are the most important ones and critical ones to build today. And so, managing that complexity is something that we have teams that do. That there are other companies, distributors, logistics companies that focus on removing as much complexity to the physical layer of this as possible. When it comes to interacting with the network, right? There's not a bunch of panels the protocol owns in some warehouse somewhere. They were completed, commissioned, cash flowing projects on roofs that are tokenized and deployed into our capital vault that are used to kind of support the revenues of the network itself. So the network isn't even touching kind of the layer up until project commissioning. I think the more interesting point on storage is, solar is great. It produces electricity when the sun's shining, but often, in the majority of the time, solar production does not coincide with peak demand on energy grids. And so while you might be removing demand from grids by generating electricity behind the meter in the middle of the day, that's not actually when the grid needs that. And so what we do at Daylight is the majority of our installations actually come with oversized batteries as well. Number one, it's a better product for the host. They get access to backup power when the grid goes down and there's a power outage, there's a storm. That's built into their subscription. And so that's just a better product because not only are they saving energy or saving money on their energy bills, but they're also increasing their reliability and increasing their independence. But number two, the battery enables the network to aggregate its capacity through that storage layer and make it available to utilities, to power traders, to entities on the electric grid that can utilize that stored energy when the grid actually is strained. And the protocol can then monetize its power at a higher rate because prices increase when the grid is strained. And so that storage layer is like very fundamentally important to what we're doing at Daylight.
Gotcha.
It's not just about producing energy. It's about ensuring that we have the infrastructure to deliver it to the grid when the grid actually needs it.
Got you. Okay, so that issue that you've like laid out here, does DeFi then kind of provide a like financialization or like an economic layer to create a market to like enable different participants to kind of I guess like not like bet but like side and like provide the liquidity or the capital needed to spin up new. Talk to us about this USDS deposit vault that you guys have on Plasma, DeFi, just kind of like how the vault interacts and helps you with this kind of situation that you're facing here.
So what DeFi is bringing to market is what I would call, a yield coin, a liquid composable asset that generates yields from an underlying yield source. And traditionally in crypto, those yield sources have been treasuries or they've been some type of on-chain money market fund. And what we're bringing is yield that is attractive and backed by something uncorrelated to crypto markets, which is the revenues produced by all of these energy systems distributed on the network, right? So it is the subscription payment from the host. It is the grid services revenues we're getting from using the batteries to support the energy grids. It's the tax credits and government incentives that come from deploying new assets onto power grids. And all of that flows back as a new novel type of yield asset that we are building in a decentralized way for DeFi markets to utilize, to collateralize, and to build like totally composable new yield products on top of this asset. And so that's kind of the vision of what DeFi is doing. To your point, I actually do think there are interesting ways to leverage prediction markets, knowledge markets, like trading markets as you start to scale physical infrastructure. But for now, our focus is on yield. Down the road, there may be opportunities for, hey, perhaps there's a way to bring some measure of electricity trading around this network on chain as well.
Yeah. So let's sort of trace through because there's a lot of aspects to this stack, right? And we've talked about a lot so far. And so just to summarize, we've got the foundational business model of Daylight, which is selling solar power and storage of solar power to the everyday human, right? Anyone who needs electricity. And you guys have power purchase agreements. You're doing residential neighborhoods. You've got a thriving solar power business comprised of multiple aspects that is generating revenue. Then you've built this liquidity layer on top of this power business, right? And so you've got Grid. This is the liquidity layer. Shout out to our friends over at M0. You guys are using their stablecoin infrastructure. This is the stablecoin of Grid, and it's fully backed, composable, redeemable. It's used to mint the yield coin, right, which is the second part of the liquidity layer. The yield coin is where someone can get access to the revenues that you're generating from the solar power company of Daylight, right?
That's exactly right. And then I think, the interesting way to top all this off is, to your point, Daylight is not just a RWA or lending platform. It's not just a decentralized physical infrastructure network like Helium. It is kind of the culmination of all these different pieces of the crypto stack that give us a competitive advantage over traditional models. And the entire system is decentralized end to end in like a totally unique way that brings something novel to DeFi markets, which is energy-backed yield, brings something novel to the deployment of the physical infrastructure, which is, token incentives and the ability to, build community bottom-up growth models for the deployment of infrastructure. And then having a totally, permissionless network that people can deploy capital into, can deploy infrastructure into, and can query in real time to see how the network's performing.
Perfect. And one more question about this, about DeFi, right? The liquidity layer on top of the solar power company. You know, Framework invested in you guys. We talked to Michael and Vance quite a bit. I think they'll be on the show tomorrow. And so they've kind of brought up this idea of yield coins and how that can differ from stable coins, right? I think what I notice is missing from the mechanics of DeFi is a utility coin or a governance coin or just a generic equity token of daylight, right? And so I'm curious, do you think this flywheel is sufficient with a stable coin and a yield coin? Or do you think that it's missing a token of sorts? And would that add anything to the overall value accrual mechanism here?
It's a great question, and I alluded to it just in that last statement, Robbie, which is I actually do think the culmination is the launch of a network token that brings all the stakeholders together, the hosts, the originators, the capital providers. If you take a step back, right, there's two things that need to be done in order to scale an energy network. You need to drive the behavioral incentives in order for people to adopt daylight and distributed energy, which is a better product, right? It's cheaper, more reliable power, but it's still a complicated product. It's an education-driven sale. How do you get them to pay attention? How do you build a community cult army to go out and scale this in the real world in a really high leverage and efficient way? And then how do you catalyze a huge amount of capital on the back end in order to finance this? We think crypto is powerful and very good at doing both of those. And so when Daylight started, it was much more focused on kind of the pure Helium deepen style, token incentive driven marketplace for driving new deployments of physical infrastructure. And what became very evident to us is that doesn't make sense without the capital layer. And so as we're starting to scale the capital layer, I think the right way to think about it is how does Daylight create a advantage in the market, not only on the capital side, but also on the origination side. And Depins give us a really unique playbook to go model ourselves off of, improve off of, frankly, and deliver kind of a net new product that closes the entire value loop for the network.
And Jason, I would say that the Helium style tokenomics of traditional Depin, for lack of a better term, are cooked. They're cooked. They're zero.
You will not hear me argue with that.
I'll look at the HNT chart and honestly, they're doing incredible work, but that is a terrible looking chart. And look, I mean, I think
that's exactly the point, right? Is that their primary business is disconnected from their capital layer.
Correct. And Jason just explained kind of how you think about this, but could you maybe just go a little bit deeper? Like if there is a Daylight token, how will you make sure that it's not cooked?
It's a great question. I think if we take a step back and look at Deepins, to your point, Helium really is cooking now, and I think their flywheel is starting to close. Like the flywheel is now closed, and I, not financial advice, but I think what they're doing is incredibly exciting today. But it's taken years and years and years to get to this point. Similarly, we're starting to see other, interesting Deepins start to hit some level of trajectory and escape velocity. But I think one of the early flaws of many Deepins, and this is actually just endemic to the model itself, is that the idea was we can print money to build a network that then can go do something functionally useful and valuable. The cool thing about Daylight is that we have both individual value to the hosts, which is cheaper, more reliable energy. We also have network value, which is aggregating all these assets and making them available to power grids to support power grids. And so there's value in the product in and of itself before someone even thinks about a token. So you're no longer required to just give this perpetual inflation stream for someone to keep a box online. The reason for someone to keep the box online is because the box gives you more reliable and more affordable energy.
Totally.
And the tokens are the customer acquisition wedge, the thoughtful way that we can give people, number one, ownership on the network they're building and upside in the network they're building. But number two, get them in a process that is again, complicated and education-driven sales process, deeper into the model. You can build unaffiliated community armies going into their local markets to help deploy and scale this. You can take the best part of Depin and apply it to a network that generates more and more revenue with every single node that comes online into its platform.
Yeah.
And so I think that is the fundamental difference is you can design a token model that can be more calculated in how it distributes itself. You can also build a network that generates revenue much earlier in its life cycle than what maybe a traditional Depin does.
Revenue meta strikes again, Rob. Jason, I would say that that's spot on because it's like when I heard about Helium and I heard about these Depin projects, it was like, all right, we're gonna evade the traditional issues that Comcast has or that other physical infrastructure networks have, because we can just launch a token and then we can just print, $500 million FTV out of thin air. And then we can just use this to like basically incentivize, cheaper usage or, whatever it is. It was like, okay, well, yeah, great. But like, how long is this going to be able to last? Or, what is the actual value of this token? And so, sometimes being an entrepreneur and being a founder, it's actually nice to be in the let's call it the second cohort of idea establishment here, because I think it's very clear that from your strategic perspective, obviously you've thought this through very, very deeply and are quite bright, but you have to do it in this more sophisticated, smarter way, and I think that's bullish.
Well, if you aren't, paying attention to the market and taking market feedback, then like you aren't building correctly as an entrepreneur. Like you should be always reevaluating your priors, strong opinions, loosely held, all of that. And I do think from the deep end, kind of 1.0, there will still be massive businesses built. I think Helium is going to be a massive business. It already is a large business. I think Hive Mappers seems like it's building a massive business. And so, what you want to do is just study what worked, what didn't work. How can we take what worked and apply it to our model? I do think there's a bit of like a pendulum on crypto Twitter that swung maybe even too far to the like tokens are interesting, where it's like tokens should 100% be unlocked, the entire token supply. It should never be used for incentives. It should literally just be equity on chain that we
100%. Yeah,
and I think that loses a lot of the interesting elements of what tokens can be used for if they're used thoughtfully and programmatically and built into the value of the network itself. And so there's a sweet spot that someone's going to hit. I would say that I think we're thinking very critically about it. It's like, how do you use a token and its superpowers in a way that also ensures that like the value is captured within the network and is very like value aligned with all the work that all the stakeholders are doing.
Coming back to DeFi, you guys are building now with Sky in the Sky ecosystem. What can people expect following the launch on December 16th? What can people expect materialistically to change? How should people think about interacting with Daylight? Just give us a kind of sense of the tangibles here following this launch.
Yeah, the 16th is really quite simple, right? So we're launching a pre-deposit vault curated by our friends at K3 Capital, built on Upshift's infrastructure. It will accept USDS and USDT stablecoins into the vault, and it will earn yield on plasma, where that capital will be deposited through kind of DeFi yield products that K3 is curating, Aave, Euler. It will earn incentives from the plasma team in the form of XPL, and will earn enhanced points in our incentive campaign called the Grid Games, as being like the earliest capital into the protocol. So for a few weeks, that capital will just be there, effectively earning yield and earning incentives before becoming the first capital into the DeFi protocol when it launches. And that allows us to utilize that vault as a way to bootstrap ecosystem liquidity with K3 across DEXs, lending markets, Pendle markets. How can you come out the gate and build really robust integrations with the best DeFi protocols so that people have something to do with the protocol when it launches? So the pre-deposit is really the initial entry point for people that are able to participate to come into the protocol and start to benefit from it.
Many people are requesting per user deposit limits. Chat is saying, Chat is wondering if there's a minimum or maximum deposit criteria.
We do not have a minimum criteria set. We also do not have a maximum criteria set. So I think we will kind of assess as we get closer if it feels necessary. I do think, like anything in crypto, right? It's pretty easy to symbol things like max allocations. You can easily spread your liquidity across multiple wallets and deposit it. And so we're going to do our best, I think, to make this as fair of an opening as possible. We don't have any kind of side agreements. It's just open to everyone at the exact same time, and participants that are able to participate in that first cap will be our earliest participants.
Have you had, and I think you probably have, what are the perspectives or the sentiment from outside of the crypto industry about this particular model? Like, when you go into the typical, like, more traditional energy space and, you're talking with other solar companies or nuclear companies, and you're explaining what you're doing with this capital liquidity layer on top of the electricity company, are they interested in it? Do they think it's going to work, or do they take some convincing?
I think, it depends on the audience. Certainly everybody that's not paying attention to the space, takes some convincing, but I also think they're like very pragmatic. And the story is, if they have capital to finance projects, then we want to be integrated with the capital layer. And that's kind of how they think about it. I think you brought this up earlier, Robbie. We discussed this earlier last time I was on the show. We raised this initial capital off chain where it's kind of our own vehicle to bootstrap origination channel. That allows us to build out our origination pipeline and enables to build out our fintech platform for local solar companies to integrate with without having to worry about managing the complexities of DeFi. And then as we start to scale into the DeFi markets, again, that's all abstracted to them, and just Daylight exists as a financial services company that is financing distributed energy projects that they're bringing to the network. So I think it's largely pragmatic.
Another question here. We got are deposits on ETH mainnet confirmed? Question mark.
Yes, the deposits will be on mainnet, accepting USDS and USDT.
That one was from Majesty Van. It sounds like Vance's alt account or something.
Dude, these guys are running a full cabal here. It's like Sky, Plasma, Daylight. This is gnarly, man. Jason, I'd like to just end this off for the last couple minutes, just more holistically thinking about this decentralized energy thesis. So I'd say a lot of people in blockchain, in crypto investing, if you've been around for a while, you kind of naturally adapt this, the debasement trade thesis. The denominator is worthless. The dollar fiat devaluation thesis. The scarce asset thesis. However you want to say it. And like obviously, Bitcoin's programmatically scarce. You've got other crypto assets that have similar properties. You can expand that outside. Then you've got gold and silver. They're on an insane run right now. Also, not as programmatically scarce, but scarce by physical nature. Then you've got real estate, land, energy, oil, etc., commodities. So it's kind of like this basket of investable assets that are just scarce by design. And then because of the inflationary regime that we've been in for such a long time and that we will likely continue to be in, this makes it appealing for an investor who can just understand basic supply and demand. When you're looking at mapping this over 5 to 10 years, crypto people like myself, we expect a 5x in 5 years. Now, I know that's not exactly what's going to happen, right? But like, if your portfolio didn't 10x for the last 8 years in crypto, I'm sorry. And so when we're looking at the actual investable energy market here, let's say to 2030 to 2035, what are the key factors that investors should look for and pay attention to? And then if you could just give us a rough forecast or just what your vision is for how this market evolves and then how you kind of want to entrench yourself in that, I'd appreciate kind of this broader view.
Yeah, maybe I'll just say that this and everything else I've said is certainly not financial advice. But I do think, to your point, right, baskets of things that you can't print more of are always attractive in fiat denominated markets. Energy is no different than gold in that standpoint. But there's something else going on here, which is the structural shortage of electricity that is able to be delivered to markets to supply compute growth, to supply electric vehicle growth, supply electrified heating growth, reshoring of industrial capacity, all these things we've talked about. And so the trade for Daylight really is a network that goes long power, right? We're going long power and we're developing distributed power plants that aggregate themselves into larger power plants through software that can deliver electricity to grids at scale. And it can do it in the fastest and cheapest way possible. We're seeing really interesting things happen in the world of private equity and infrastructure funds, right? Blackstone, KKR, they're all buying large scale power plants because they are trying to express this view of how do we go long electricity. The last year, I actually just saw this yesterday, which was super interesting, but the EIA just published data on residential retail electricity rates. Retail electricity rates for the US, across the US average, this is not the top quartile, this is average, increased 7.5% from 2024 to 2025, significantly above inflation. And that, again, is this constraint that we have as a society of we need to go long power. We need to do it in a way that is fast and efficient and can get more kilowatt hours onto the grid in a way that doesn't require all this necessary transmission and distribution infrastructure upgrades, which make things even more expensive. And so what is my prediction? I think that being in the business of building power plants is going to be a great business for us. I think that building and scaling energy capacity faster and cheaper than other centralized developers can do it is a competitive advantage. And I think that the world in 10 years will look, from an energy production standpoint, much more decentralized by requirement, physically decentralized than it does today. And Daylight hopefully will be one of the major players, if not the major player, that's driving that kind of fundamental shift in how power grids function.
And so if we think about like Uber, right, or like some of these other kind of P2P applications that have really grown in size over the last 10, 20 years, is it a similar thesis as to why like ride sharing has done well, as to why decentralized energy is going to do well, or is it different? Like, is it like, is it a fair analogy?
I would argue it's different. I would argue it's different. And you know, the reason Uber and decentralized ride sharing took off is because it's simply a better product for the end user. Decentralized energy is it offers things twofold. It's a better product for the end user, you know, the person who's deploying it. They get cheaper, more reliable power. So that's valuable. But it's also, again, this structural advantage compared to other deployment models for the grid. If you don't deploy distributed energy, prices will continue to spiral out of control. They'll continue to print at 7.5%, 10% annual inflation. And that would be, I think, pretty problematic for power grids. So there wasn't like this like external like taxis disappeared overnight and Uber had to come fill the gap, which is what Daylight finds itself in the position of. We literally can't build enough power, and all the companies that are out there attempting to scale energy capacity in new ways are going to benefit from this structural trend. I think the analogy would be like if taxi companies were made illegal overnight and went away, and all of a sudden there was nobody to drive anybody around, and then Uber came into the market.
Got it. Holy crap, man. I need a bag of Daylight. Jason, thanks for your time, man. I appreciate it.
Awesome. Thanks, guys.
It's been awesome.
Thanks, Jason. We'll see you next time, man.
Appreciate
Congrats on all the success.
All right, buddy.
Thank you. Thank you.
Bye.
See you soon. Bye.
Man, give me a bag of Daylight, please.
The Rollup has turned into the Decentralized Energy Podcast.
Dude, this book, I'm telling you, you tell me I sold the bottom, but I'm going to keep diversifying, Robert.
You diversified into cash at the bottom of the debate.
Yeah, at the bottom,
at the bottom of the debasement trade. Don't talk to me about diversification. It's not like you went directly from.
I'm
Bitcoin
assessing my options.
To uranium.
I'm assessing my options.
Yeah, 25% later.
You're a clown, bro. Oh my gosh. All right, let's rip the timeline. There's a bunch of stuff that's been going on. We got to talk about it. We got our next guest in like 20 minutes. So we'll pull up
yeah, let's go screen share.
Whatever we want first. But yeah, man, I mean, this book changed my, so good old Mr. G gave this to me.
Yeah.
And he was just like, read it. And it basically was the reason that I bought a lot of gold and silver, which is now up like over 2 times from when I bought it, which is crazy. Back in like, I don't know, 20. So I sold the bottom again there, you know, at 65K Bitcoin and got myself some gold and silver. Then that has now doubled or tripled over the last 4 years, while the Bitcoin that I sold at 65 is sitting at 94, only a 50% increase. So, man, maybe you should do some alternative asset class investing yourself, Robert, and then try to assess the choices of your fellow friend here. All right.
I think you make great choices, and I think you are unfamiliar with my diversification.
Yeah, you want some cows. All right, dead bags don't pump. This tweet is just
so tell us about this one. Tell us about this one. Feels like it's maybe a little stale at this point.
Hey Shiv, man, I was trying to hang out in Art Basel. I didn't get to see you. I'm sure you were having a hell of a time, but man, you marked the bottom with this one, buddy. Oh, you marked the bottom. All right, so
your bags aren't going to bounce just because you're emotionally attached. Why did they bounce? I let go of many tokens that were sitting dead in my wallet. It doesn't matter when I bought them and how long I've held for, waiting to break even until it goes lower, and it's not even worth a dime. It's crazy work. Start asking yourself whether it has potential to go up, and they are still delivering. The mindset has helped me to buy into conviction only plays instead of holding on to dead bags. Do the same. You won't regret it in the long run. Look.
Okay, so I can actually take quite a bit of valuable points from this, other than just like memeing that it was the bottom. As a fellow Pengu, you know, you got to understand that the Pengus are smart. Like the Pengus are not like out here shooting dumb stuff in the world. Like, he's got a point here. The point is like concentration in investing, especially in crypto, in an asset class that is so heavily correlated. Now it's been slightly less correlated this year than it has in the past, where like when Bitcoin would go up, everything would go up. When Bitcoin would go down, everything would go down. We saw different types of runners this year and different types of things happening that wasn't kind of familiar or that didn't happen in the last couple of years. Like from 2017 when we first got in until 2024, Bitcoin went up, everything went up, and then we had this weird sailor bull style run that wasn't normal, right? But he's got a point, which is that concentration is how you win. Like you're going to win in this market by holding heavy size in long-term investments that you're really, really certain on, because you'll be able to weather the drawdowns. You'll be able to hold through bear markets and hold through bad times. I think what he's trying to say here is like, if you got a bunch of random dust, it's okay to sell the dust, man. Like it's okay. And I'm with it. And a fellow friend of mine also told me the same thing several months ago. He was like, man, like I'd be dumping everything that you're not like super certain on for the long term. And you can always rebuy. And so I think it's like bad timing for a good tweet.
Okay. That sounds about right. Sell the dust. I also think, you know, the point that you're getting at, timing isn't terrible because selling dust is tax loss harvesting before the end of the year.
Yeah, you remember that vapor coin that's in Hyperliquid? Dude, yeah, we're gonna tax loss harvest the hell out of that thing. Whenever you're ready to press the red button on that one, we'll get a nice little
the market press the red button on that one for us, buddy.
A nice little tax loss harvest on that one.
Let's move on.
All right.
I think generally we're talking about okay, well here we got infra. And I think this is something that you got to consider, like, okay, well, what infra do you have in front of you that you're reliably, sustainably bullish on for the next decade?
All right, hold on now. Tempo Testnet Live. We should have done stable mainnet, major issues segment. So Plasma launched, right? Stablecoin chains. It was like the hypest thing since. It was the most hyped up launch of the year. It went to Plasma. Went to 15 to 18 billion FTV. It is down 92% now to like 1.8 bill FTV. Stable launched with all sorts of problems and all sorts of issues. And the sentiment around it is terrible. DeFi Ignis put out a whole tweet about it. I don't really like to. I mean, so hold on.
We've got, hold on. It's important to call out. Like when we saw the pre-deposit, there was 7 people, literally 7 wallets that bought the
the stable pre-deposit vaults.
The stable pre-deposit.
Also, guys,
filled up with like
disclaimer. As you know, we invested in Plasma. We don't have any investment in Tempo or stable. But so I think Plasma was like the golden child, and now is kind of like the hated child of CT. Stable is not even going to have its time in the light. It's just going to be Ignis thing is going to go down only. Tempo is like the new, like, wow, like the savior of crypto. Like, wow, look at these partners. Look at Dankrad.
Who's calling it the savior?
I am. Crypto? I'm telling you, that's what
Tempo's a Web 2 company. Tempo is a crypto Web 2 company.
Okay. I think you're right.
I mean, they're stable coins and they're good infra, I'm sure, but calling them the savior of crypto, I think, is a little bit misleading because they don't really represent.
That's what the sentiment in this category. The sentiment in this category is kind of like that right now. Like Plasma and Stable are cooked right now. They're cooked.
And look, you got to look at the lineup here. A lot of these companies are working with Tempo and have not really came out and said that they've got much of a crypto strategy. So the partner list is extremely impressive. Look, we're going to celebrate a testnet. There's been a lot of testnets. A lot of testnets have come out as the greatest thing since sliced bread, and then the mainnets fall short, and vice versa. Sometimes testnet is a nothing burger, and mainnet comes out and busts the doors wide open. So I'm going to
so there's a couple cool things out here.
Measured when we talk about testnet.
They made some interesting decisions from a first principles perspective. As far as like actual blockchain design,
the dedicated payment lane, stablecoin gas.
I asked Zaki what his favorite was. He was like,
built-in stable asset DEX is a pretty unique design choice.
They have sub blocks, and fee sponsorship mechanism that is super unique.
Sub block sounds like embedded rollups.
Yeah, we have like Zaki on.
You kind of have like a finality mechanism that's baked into a intra-block window. I know it's effectively a roll up, and then you roll up those transactions and put them into a single block for settlement.
Yeah.
So I'd
Interesting.
imagine
We'll
that
have to get Zucky on. I just told him we'll have to get him on.
stablecoin gas is table stakes of all these stablecoin chains.
Yeah.
I tend to agree that partners are going to be where these stable chains are made into winners and losers.
Partners?
Yeah, you got to look at the ecosystem. How much flow? It's all going to come down to the flow. The infrastructure, like, look, we can talk about design choices, but I don't think that's going to be the moat. I don't think that's really going to create that much of a better product in which they're going to start to win some of these deals. Tempo already has a moat with Stripe. They've already got the distribution, whereas I don't think they're really going to get beat too much on product by some other company that doesn't have the distribution. And so I would agree that Tempo is currently leading the stable chain.
Tempo's brand is giving me like Art Basel vibes.
That sounds like some recency bias.
Yeah, I mean, it's giving me like I don't know, like they just did a partnership with Klarna, and Klarna just quote tweeted it. Like, it's giving me like
they're sort of like neo finance and then crypto in a different world.
Yeah, it's giving me like some fintech vibes for
like
sure.
Klarna, Stripe, even like Revolut, Cash App, Nubank, Shopify, like Visa, MasterCard are part of the old crowd. And like
Tempo invested 25 mil in Commonwealth. Wow.
Like the BVNKs of the world, the neobanks.
Yeah, that's the vibe that I'm getting.
The Klarna is like the neo finance like world. These are the guys that like are even like, you could even put like Coinbase and centralized exchanges in that. Like that is the vibe that I'm picking up from like Tempo. And they've got distribution. They've got the partnerships for them to work. These are the guys that don't really care. They don't have research fetish. They're building something for the real world.
Yeah.
And
that's what Dankrat said.
Kalshi is also part of this crowd. Whereas in the other world is where you kind of get into like, you know, truth-seeking, philosophically aligned with Ethereum and this.
No, they don't care about that. They just want to make money. Tempo just wants to make money and build a business on chain. So
I tend to think like there is a world in which I do think that maybe like the latter is more sustainable, but in the near term, you're going to see a lot more business cases won.
I don't know. Tempo's giving me very mercenary vibes. I think that they're coming for people's heads. I'm bullish, but I'm scared. Let's move on. Congrats on the testnet, guys. Okay, so this is cool.
Oh, new just quick. Yeah, this is similar to the last thing, but just quick thing is new Bitcoin treasury company just dropped. It's actually been around for a long time, but I believe 21 Capital went public today.
Like an IPO?
Yeah, I'm going to send this to our technical producer behind the scenes. Let's see if we can download this video and watch it on the stream.
Wait, what happened? 21
Capital is it's the conglomerate of Jack Mahler's. It's Howard Lutnick's son. Forget his name, but it's Howard Lutnick's son. Obviously, Howard Lutnick, Commerce Secretary in
Jack Mahler's is Howard Lutnick's son.
No. They partnered up. Also, Pompliano, I believe, is affiliated with this. It's like pretty heavy hitters that have talked about this treasury company. They've also done like mega deals with Tether.
Cool. Okay. Well, that's cool. But yeah, so this neobank thing is interesting. You can kind of see the moats a bit, but basically like they've mapped out the players here of the neobanks. And yeah, I don't know. I think it's just like very interesting how there's a lot of competition right now for getting users to use your physical card. So yeah, I mean, I think this is a super cutthroat category and a winners take most or all. I also think it's a very big category and very profitable category, and something that people will underestimate how quickly we get new adoption through this type of kind of like sector. So I think it's just something definitely to pay attention to. And like, I think it's going to be an investable category from the public liquid side going forward.
I think we're going to get that video ready before the next guest comes on. So let's go to that one next. In the meantime, crypto cards, neobanks. Look, this is where we're headed. And I think this is the current thing, right? Where you have this startup category, you have neobanks and funds. And then, we're going to see if these neobanks and crypto cards can get distribution faster than American Express and Bank of America and Wells Fargo can integrate the technology. I think those banks have enough capital where they're going to probably look to acquire some of those more tech advanced startups.
Yeah, cool. We'll see.
As much Bitcoin
I can't really see the chart that well, so we'll just move on through this. Let's go ahead and bring up Jack Mahler, see what he's got to say.
Yeah, let's see if we can get some audio here as well.
Man, that is tempo Testnet had me dying. Yeah, I mean, look, I've used crypto.com. I use EtherFi. I think Plasma has Plasma 1 coming out. So yeah, it should be really, really interesting to see kind of how they work it out.
It's all going to come down to the yield, right? I mean, we're going to use the card that gives us the
best benefits or whatever it is.
Yeah. So I think this is, Arthur from Tezos came on and was talking about fat protocol thesis. Look, fat user thesis is where we're at. Like, fat user thesis is what happens when you get competition in the market. You get, so many more cards that we can end up just looking and taking a choice out of like, which one is going to give me the most cash back? Which one is going to give us, the most users, the most benefits when it comes to, points, airline travel, all of these things. These are the neobanks and the credit cards that we plan on using, right? The ones that are going to give us the most of the value. So we've got some questions from the chat. Did Ready get mentioned in the neobank moat? I believe it should have been. Obviously, Ready is the recent rebrand from Argent. Argent was the first smart contract wallet from Starknet. Did it get mentioned in the moat? Let's see. From Polaris. We'll call out some notable names here. Obviously, Rain card is doing quite well. They also started out in this Web2 world. Argent, I see here, did get mentioned. MetaMask is here with their card in a couple different categories. And then you've got a few like AI agent like cards that I think are going to be optimized for the agentic economy. This is something that I anticipate is going to get more and more adoption. Revolut's in here, Rain. You've got sort of the neobanks that have been around a while, already have some distribution, like the Revoluts, the Cash Apps, even the centralized exchanges you can put in there, Crypto.com, Gemini. They've been around for quite a while. And then you've got some more niche cards. You've got Pay. Don't forget about Pay Link. They're in it for like more privacy. And then you've got more regional neobanks. And I could also see a lot of these neobanks either launching their own stablecoin or partnering with a stablecoin to get more verticalization in the stack. I think that is pretty inevitable. Let's see. And so there's quite a bit more to come out of this market. But you gotta realize that a lot of these historical banks are not going to go down without a fight. They have been around for such a long time. They're going to do everything that they can to preserve these businesses that make up a pretty significant part of their revenue. And so I would imagine that as like just today, Coinbase announced that they're partnering with PNC Bank. PNC is going to let you buy Bitcoin directly from your online banking, and they're going to use Coinbase to do it, the Coinbase exchange product. And so as banks start to incorporate custody services and open up the ability to access crypto from their online banking, we're going to start to see more and more products built on top of that basic infrastructure. So now you can buy Bitcoin, through your banking portal. Then you're going to be able to spend that Bitcoin on your debit card or on your credit card, and you're just going to see all of the products that are currently available through the banking stack become cryptoified. And you're going to have the augmentation of crypto stable coins, right into that same product stack.
Well, we got a new little Patrick Collison banger. This is about a vibe shift afoot in Silicon Valley, about what one should work on and what's worthwhile. Honestly, I think this is coming from a place of like existentialism with regards to AI. But like this is like really interesting. EA is no longer the automatic default for smart people. Does that mean like, what does EA mean? There's increasing skepticism of slot and slop machine dynamics. So that mean like gambling and AI just garbage? Overall, what is worthy and valuable feels like it's becoming more central. Davos expert morality is stale and discredited. If I'm being honest with you, I don't even really know what half this means.
So Patrick Collison is obviously the Stripe founder,
Yeah.
and Stripe is very deeply entrenched with Tempo, and so this is marking what, and we should probably coin a term for this category, right? It's like the neo finance category, where it's not quite Web3, it's not quite Web2, it's like the Coinbase, Stripe, Tempo, centralized exchange, neo
I
bank.
think it's just called fintech.
Yeah. I mean, you could call it fintech, right? So Tempo is more like a fintech company than a crypto company. I guess you could see that. And so this is what you're seeing out of this fintech neo finance category. What is worthy and valuable? Like these guys are sorting through and finding the ethical motivation to build this category, where they don't want to build slop. They want to build something that's more efficient. But they've already done a lot of the work on the traditional legacy infrastructure that powered like legacy fintech. This is like neo fintech.
Yeah.
They're going into this direction, and they want to make sure that they're doing it ethically, morally, and aligned with the values of this customer segment that is sort of this combination of Web2 tech, fintech, and crypto. It's somewhere in the middle, and they're trying to figure out the value system and the belief system of this category.
Okay. And more broadly, Silicon Valley, it seems like as I think it's AI.
It's a fintech.
I think it's pretty
Silicon
AI.
Silicon Valley is very AI, but it's also very fintech. There is elements of like New York financial hub energy in this category.
Right.
But it is very Silicon Valley when it comes to the tech. So it's kind of this convergence of two. It's like very like it's this American dynastism, right? It's like very pro innovation on both technology and finance. And this is where they converge, is this neo finance fintech category. And I think, you can see what it's defined by. They don't want gambling, right? They don't want necessarily financialization of everything. That's crypto casino vibes, too much in that direction. But you also, and you don't want slot machine dynamics, which is where if you get too far Silicon Valley, you end up like Sora, ChatGPT, AI slot vibes. And so it's very intentional innovation where it's not just innovation for innovation's sake, seeing like, look what we can automate, look what we can get robots to do.
Yeah.
Right. It's like, it's very much intentional and ethical, I think, is the goal, right? But it's still very much under development.
Well, I, for one, have been enjoying their cheeky podcast, beer with the boys in a made-up pub studio. So maybe we'll get invited on one day after the Rollup does 100x from here. Guys, we're going to take a quick pause. We have an amazing next guest, Mark Greenberg from Kraken, really aligned with both this tweet as well as the following one. So, or sorry, the previous one. So we'll take a quick break and be right back, guys.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Welcome back to another episode of Money Moves Fast, our premier weekly show covering all things tokenization, RWAs, and payments.
This show is made possible by Polygon, the leading blockchain for payments and RWAs. Money Moves Fast is the convergence of Wall Street and digital assets. Now sit back, relax, and enjoy the show.
Boom. Money Moves Fast, episode 13. Mark Greenberg here today from the head of Kraken Consumers Business Division. Mark, thanks for calling in, man.
Hey guys, thanks for having me. Really
Yeah, man, it should be a pleasure. We were just riffing on all these different neo-banking kind of, applications and differences, and there's this whole sector is really growing. Today we are on Money Moves Fast, episode number 13, which is our weekly premiere tokenization and payments show powered by Polygon, one of the leading providers for stablecoin payments, low fees, great transactions, easy experience. Use the chain. Check it out, guys. We got Mark Greenberg here. Mark, quick background on you, man. Head of Kraken's consumer business. What does this mean? What is the head of Kraken's?
Yeah, it's a good question. It's a bunch of different stuff, Andy. I lead all of our work on crypto trading on the retail side. Everything we do around tokenized equities and equities here. So everything we're doing around X stocks, and then also everything we're doing with our brand new neobank competitor money app called Crack. So really excited with we got so much on the go here, and we just believe that there's so many opportunities for Kraken to make everyday payments and investing and trading just a lot easier.
Robbie
Mark,
and
I think
I are OG Kraken users, by the way.
Oh yeah, I think Kraken was
2017.
our first centralized exchange that I opened up way back, either 2016, 2018, something like that. And it felt like you guys were one of the pioneers in the space. Like you guys got started, you always had like this really core brand ethos of kind of like this adventurous guys, like when crypto was the Wild West, right? It feels like the vibe has shifted a little bit. And I think you caught a little bit of the rant we were going on before you joined, which is that we almost have this new category, this next generation of fintech that's popping up. It's neobanks, it's centralized exchanges, but also going into the decentralized world as well. It's not quite crypto, but it's also not quite Web 2. It's sort of this it's not quite like Wall Street finance. It's not quite Silicon Valley, AI slop. It's like somewhere in the middle. It's trying to take the best of both worlds out of all of these things. And so I'm thinking, my question is, what was the inspiration behind Crack? When you're looking out at what banking and crypto and money and finance is going to look like over the coming, decades, you guys saw an opening for Crack. What was the inspiration? What do you think that is going to look like over the coming years?
Look, guys, I've spent my whole life trying to make banks suck less, and banking still sucks. I just it is still too hard to do most of the basics. If you think about what Kraken's been really good at for more than a decade now, it's turning one thing into another thing in the Kraken platform, right? So that was fiat and stable coins and crypto. Now it's tokenized equities. It's lots of different pieces that we're putting under the hood, more different types of currencies, more different types of stable coins, more different types of assets. That's what's always, to me, been broken about banking to a large extent too. Why, as a Canadian, do I have to hold mostly Canadian dollars? Why do I have to be paid in Canadian dollars? Then I can convert it, and then I can use my Canadian dollar credit card. Oh, well, shoot, I have to actually convert it back. I was talking to someone today. They're like, okay, the best way to get euros is you take your Canadian dollar out of your bank account, you move it to US dollars via Wise, then you move the US dollars via Wise to Revolut in Europe, and then you can spend on your European card. Those are the kind of things that are just completely outdated. As a Canadian, I don't necessarily want to hold Canadian dollars. We've seen what's happened in Canada over the last few years, and maybe it's not the place where I want to store my wealth. Maybe I want to store it in Tesla stock. Maybe I want to store it in Bitcoin. Maybe I want to store it in Ethereum, Solana, you name it, stable coins in US dollars. All of those are options now, and banking still hasn't really caught up to the fact that everything can be money, and we want to be able to spend everything that we're using as money in the moment. And so that's what we were excited about with Crack. Takes all the things that Kraken was really good at behind the scenes and puts it front and center.
Awesome. And so we also we realized that the big banks are not going to go down without a fight. Like you said, we know this, that banks sort of suck. They've sucked for a long time. We're trying to make them suck less, but we're almost, inventing a new form of bank rather than, seeing the big banks sort of, be sort of reflective and understand that, maybe they can improve their own products. And so I'm curious how you think the legacy banking companies are going to respond to this. How do you think legacy banks are going to approach crypto in your experience? Will we see them, augment their services with something like Crack, with neobanks in, M&A? Are they going to start to acquire more of these things? When you, are looking at the banking system today, how do you think they're going to react to the uprising of neobanking and crypto?
Look, I'm going to say slow and late just to start, right? So I don't think this is happening anytime soon. Typically, my experience with bigger banks is they're going to talk about this for a long time before they take action on it. And we're now in this talking stage, so maybe we get to action at some point. First and foremost, I think they're going to continue to use Kraken behind the scenes. So whether it's Crack, our own neobank, or whether it's Kraken in bed, which empowers banks like Bunk, crypto does need to be a part, stablecoins do need to be a part of banking in the future. And we do expect folks to use the security and transparency and liquidity of Kraken to make that happen. That being said, I still think banks aren't yet in a position to get to a place where they are going to see things other than their local fiat as money. And that's something that I think more and more users are seeing. Like, hey, why do I have to hold fiat? Is fiat really going to hold its value? Why can't I hold gold and stablecoins and others? And so I do think that's going to be something that banks are slow and later on. I don't really see them as our key competitors. I do see some of the neobanks, though, moving more into that same kind of narrative. And I'm personally excited for it. I look forward to having a wealth of new types of money apps that don't operate the way the traditional.
Yeah, most definitely. And I think there's a global use case for that. There's a democratization thesis around that as well. And so, we're talking more about this, about this app specifically. And we just looked at a chart comparing different neobanks, and there's all these different types of categories here. I think maybe you could just walk us through the high level of what makes a really, really good neobank, debit card, vaults, salaries, earnings, payments, crypto first kind of user experience. Like what makes a really solid neobank, and kind of how do you think about the idea of building a really solid finance app for somebody to kind of have this one-stop shop?
Yeah, it starts with the ability. It's three things. So the ability to spend your money, save your money, and send your money to others, right? Those are really the three things, maybe deposit as well. So let's start with spend your money. So we launched recently the Crack card in Europe and the UK, 1% CAM up to you, or stable coins. You can spend from any currency you like, which is pretty cool, and including everything as silly as maybe Fartcoin, if you're into that kind of thing, all the way through to US dollars or euros or stable coins or CAD or whatever you want to actually spend, or actually X stocks, which for me is something really exciting. Then you got, hey, money is going to sit in this account and I'm going to want to save it. How do I let it grow? Well, on-chain DeFi yields are some of the best, safest opportunities out there. And we're going to have in the Crack app over the next few weeks, 10% plus yield opportunities. Those ones are the more risky ones will also have 5-6% ones that are less risky, but opportunity for folks to earn more than the basically zero that most of the traditional banks pay at this point. And then you're going to want to be able to move the money in and out. That means payroll deposits and pieces like that. So we're working with a number of different organizations to make that available by default, but you also have regular banking IBANs in Europe and the UK when you use Crack. But then also the ability to, every market is a little bit different, and what that means. In Canada, it's specific bill pay approaches, etc. Those are the three things you need to make a really great bank, or a really great money app, because we're not a bank. But banks historically have really done none of those super well. A little bit on the card. They've been pretty good at card. At the same time, but typically don't give most of the value back to the users. Secondly, they don't allow you to save in all sorts of different things, and they certainly don't allow you to grow your money in all sorts of different types of assets. And then, so those are things that we're really excited about being able to use on-chain DeFi opportunities for, and what we're excited about with Crack.
Awesome.
I'm curious how you think this wave of these financial super apps, how you think this is going to change consumer behavior. Like, because for so long you had, stocks, you went to your broker, right? You went to a brokerage account, you had stocks over there. Yeah. Now everything's kind of getting bundled up. You got X stocks,
Robinhoods,
the Robinhoods, right? Everything is becoming, you can go there, earn yield there, right? 7%, 4%. You can get access to DeFi yields effectively as a checking or savings account. Checking because you have your card, savings because you have a high yielding account, and then you have your stock and your brokerage account right there in the same app. How do you see this playing out? How do you think consumers are going to react to it? And where do you think the points are?
Well, first, I get excited about all the places something like X stocks can be offered. Financial apps, sure, but actually you can buy X stocks on Telegram now. And so if you're in a country like Uzbekistan and you had no access to stocks in a prior life, unless you went through an arduous, very complex process because you had a lot of money, well, you can just do that now inside your messaging app. More and more of finance should operate like that, where you don't need to go through 10,000 different steps in order to get access to the same thing as the big boys.
Yeah.
And is that so? Yes, now that's coming to certain like super apps on the financial side. Great. Like, why did I need 3 different apps to do the basics of holding Bitcoin and a stable coin and fiat and a stock and a venture fund and all these other things over time? We should have one ability to do that. But actually, I hope over time that actually comes totally out of traditional bank style apps and broker dealer style apps, and we get to a place where this is just commonplace for you to use the kind of apps you use every day to buy and sell stocks or tokenized stocks and have yield on your assets as well. So that's kind of where I see it going, much more, and maybe this like super app kind of thing is a step in that direction.
Yeah. Mark, so this is actually quite the episode, because you guys have, recently rolled out this Crack app, or at least kind of announced it, and you guys also just acquired Backed last week. So like a lot of things happening on this kind of tokenization, kind of like bridging this gap front. Why did you guys acquire Backed? And maybe you could like layer that into your thesis about how you think tokenized assets will kind of reshape global capital markets. We just saw the US SEC, is it Chairman Paul Atkins, say that all markets will be on chain in 2 years. So like clearly it's happening from the highest of powers. Talk to us about your tokenized asset thesis as it relates to Backed and that acquisition.
Yeah, so we started X Stocks in partnership with Backed now in first week of July. So we're coming on 6 months at this moment. The thesis isn't that different than banking sucks, because equities suck even more. We wanted to get to a place where you could have all the advantages you get at crypto trading on equities. I can store them in my own self-custodial wallet. I can trade them 24/7. I can move them to anyone I want. I can buy them anywhere in the world. And I can use them as collateral to get loans. Why couldn't stocks look like that? And I often use my own personal examples where, like, in Canada, it's almost impossible to buy a European stock. or when you're trying to move from one broker to another, I don't know if you guys have ever done that, but like trying to move an equity from broker X to broker Y can take weeks sometimes where you can't even touch your assets. When I did this in Canada, there was an actual fax sent a few months ago. I didn't even know faxes existed anymore. So
the Canadian way, man.
well, exactly. And I like to pick on Canada, but
my parents are from
it's
Barrie,
not
man.
unique.
So it just hits different. My parents are from Toronto, basically. So it's pretty funny.
So why can't tokenized equity solve all of that? And now they can. So X stocks are regulated in Europe through a retail prospectus, all sorts of, and then there are actual stocks held behind the scenes to make sure that you can use your tokenized equities in a very similar way to the way stable coins work. So there are real equities there. We store them in a special purpose vehicle, and then you can buy and sell tokenized equities 24/7 on Solana, on Ethereum. You can buy them on Telegram. You can sell them on Telegram. You can do all sorts of different things with them that just you can't do with traditional equities. And we looked far and wide to find someone who could help us do this because, as I said, we have this Kraken platform. We're really good at liquidity and good at moving thing A to thing B. How do we do that same kind of thing on the equity side? We talked to a billion folks. There's a lot of companies out there doing permissioned. You got to be KYC'd. You can only do it on a Tuesday. Like all sorts of very complex rules around this. Bakkt had a specific approach that was really unique and allowed us to create X stocks in a truly permissionless way.
Awesome.
After a few months of working together, we decided it was too cool to pass up. That's the end of the story. And now we just continue to work together on making it huge and growing X stocks together. I'm super bullish.
So how big is X stocks now? Users, volume, integrations, like how has the growth been what you expected, more or less? Kind of how's it looking?
Yeah, it's going really well. So we're at about 80,000 users of X stocks, about $200 million or so of value locked up in X stocks so far. Just getting started, to be honest. Lots more growth to come, but we're starting to see that hockey stick as people are using it. And we're at $12 billion of volume. So those are $12 billion of trades that have happened across centralized platforms and on chain. So and I think that number was 10 billion even a few weeks ago. So growing really fast, seeing a lot of success, and look forward to just finding more and more places to for X stocks to be offered among many different apps. I'd say the most fun part for me is the very first X stocks billboard, not related to Kraken in any way. It showed up in South Africa. A company in South Africa saw it as an opportunity for them to sell stocks directly to folks in that market without having to go through the hoops that you would normally have to do. And so they put up a billboard about it in Johannesburg. So that's the kind of thing I get excited about with X stocks. Yes, you can buy and sell them on Kraken. Yes, you can buy and sell them on Telegram. But the more people around the world we can give access to X stocks through as many different apps and experiences as possible, the more excited I get.
Very
cool. I love it, man. Yeah,
go ahead.
No, I just think that democratization of access was a big thing that a lot of us were interested in when we first got into the space, which for us was like in the 2017 era. And it feels like we're just now really starting to get that level of adoption with stablecoins and this neobanking primitive that is enabling the Turkeys, the Syrias, the Latams of the world to really kind of come on chain, participate in global equity markets, especially US equity markets, and then do it in a way that preserves their purchasing power from their local currency as well. And so there's just like a lot of really cool happenings here that actually are ironically linked to like institutions and to the suits, which people are like, oh, I don't want to be the suit, but then are actually providing the core ethos of the space at the same time for like banking the unbanked and such. So I just want to throw that in there.
Totally agree. Look, everyone should have the same access to everything. I strongly believe in that. And I think that's something that crypto enables in a totally different way. Stablecoins do the same thing. As a Canadian, I have far more access to US dollar yield than I ever had before through something like USDG. And we're just going to bring that to more and more asset classes over time. That is the promise of crypto. It's the promise of blockchain, and it's exactly what I think X stocks and tokenized equities and the Crack app in a different way are providing for folks. So super pumped about what we're building here.
Could you tell us more about the Crack app? Because I think people are somewhat familiar. They're familiar with the exchange offering on Kraken. They're familiar with Ink and an on-chain ecosystem. The Crack app, tell us more about it. What are the distribution channels? Like what do you guys currently have on there, and how does it separate from the other existing parts of the stack?
Yeah, so one thing that we've been probably unique versus others on is we prefer to have a group of apps that do one or few things really, really well and that interact with one another. And so Crack is our money app. It connects deeply into the Kraken ecosystem. You can use your Kraken username and password. You can move funds back and forth between them. But it is designed to be the replacement for your checking account or current account. Available around the world, allows you to send and receive any asset that of the 400 plus that we support here at Kraken, and more coming every single day. If you're in Europe or in the UK, you get access to a card. We're working on getting that around the world and just continuing to build basically something that can replace your bank account. And it just works seamlessly with all the other apps that we have at Kraken, whether that's Kraken or Kraken Pro or the Ink ecosystem, etc. So get the best of Kraken for a different use case in money, in saving and spending your money, and we look forward to bringing a whole next generation of users into the Kraken ecosystem via this different approach.
I think that's spot on. The next generation of users are not going to be intellectually captured by the legacy banks, thinking that their savings account can only earn them 0.25% per year, which is probably pretty generous for the existing banks. The new generation is going to come first to something like a Crack app, and they're going to see 7, 8, 9%, probably through some on-chain yield source that you guys are passing through to the app. And the end consumer is going to be, why am I going to use, some of these existing legacy banks that give me 0.25%? I can go get 20 times the yield on my savings account by depositing through something like Crack.
Yeah, exactly. Look, there are going to be some users that are going to chase the yield that's available for them. There's going to be a different group of users who don't want to trust a bank to lend out their money and hopefully have it behind the scenes afterwards. So if you want to hold T-bills, you want to hold gold, tokenized gold, you want to hold tokenized equities as your main mechanism of holding money, you can do that as well. And there'll be a whole group of users who want to do that. And then it's also just faster to transact in crypto versus cash. Whether that's a stable coin or crypto directly, you can, while banks have done a good job of more or less making that hidden behind the scenes for you within a country, it's still really hard to get. When I'm in the US right now, when I try and like pay a friend here or give them $10, still the only way to really do that, there's like one or two apps. Can't use Venmo, can't use Zelle, can't use any of the things that folks can't use Cash App. So I still end up going for boring old fiat. I literally go to the bank, take out money, and hand it to someone. That's ridiculous. And Crack App is part of, I think, the solve, because Crack App is in all these countries at the same time and allows you to move money easily.
Well, I've just downloaded it. It looks pretty cool branding on it. So I'll have to set up the account. You're saying that we can just sign in with our Kraken account, which is awesome. It looks like it says that here. So that's exciting. I'm curious, when you're thinking about, like, Robbie's talking about, right? So there's banks that the savings rate isn't that interesting. Now you're getting to a separate point where it's like the actual fintech services right now are actually not that compelling either from a transfer perspective. So who are you really competing with? Is it traditional neobanks like Revolut? Is it Venmo? Or is it some of these more traditional banks like Chase or Wells Fargo that Rob's mentioned? It seems like there's faults on both sides that you guys, for lack of a better term, will be looking to exploit from a business case. How do you kind of think about competition?
I don't think anyone has the street cred around bringing the best of the crypto world and the old traditional banking world that Kraken has. So I think we're actually in a really unique spot with the Crack app. We're taking some of the things that we've done as well, if not better than anyone, on both sides of that, and putting them together into something that is a little different from everything out there. Yes, on one hand, you've got the traditional banks who, we've talked a lot about the issues there. On the other hand, you've also got folks they've got a lot of these more on-chain crypto specific offerings that also just don't always work in the easiest, simplest ways for folks who still need to operate mostly in the traditional world. And that's what we're trying to bridge with Crack at the moment. We'll have offerings in all sorts of different spaces, and so we will have some more on-chain specific opportunities as well here at Kraken, and we're just building those. But for this specific use case, the idea is to bring in as many new users into an app that they maybe don't even care has crypto in it, to allow them to use the benefits of crypto, of blockchain, of stable coins, of X stocks, without having to actually spend a whole lot of time figuring it out necessarily.
So maybe just a bit more concrete than on the question with regards to competition. There's this chart here of crypto cards, and there's basically by categorization basis moats. You've got perks and incentive programs, speed and UX advantages, geographic or regional lock-ins, infrastructure or white label, network effects, regulatory licensing advantage, exchange/platform integration, and privacy/niche positioning. And you've kind of got all these different cards from the Cast, Crypto.com, Rain, EtherFi, Holy Held, Kaju, MetaMask, Argent, Cypher, Tuyo. There's 30 of them now. I know I just laid out a lot of categories here, but like, what is the edge and the core insight behind Crack Card that other crypto cards aren't solving? Like, why do we need another crypto card right here, right now? Is it cashback? Is it multi-asset? Is it rewards? What is it in this kind of like categorizations that you feel that you guys have a significant advantage in?
Yeah, so first, the rewards are industry leading. So it's a Europe and UK card. When we bring the US card to market, it will also have some of the highest rewards out there. That's first. Second, what makes it really unique is that you can store your value in anything and spend it just the same way you would local fiat. That's something that you just can't do easily in this world today. So bringing all those assets to market is something that's really important. Again, as a Canadian, I hate holding Canadian dollars. I'd much rather hold USDG and earn my 4% yield. I can do that just very, very simply with the Crack Card. I never have to worry about it. I still get the yield as if I had an American bank account, and I also get to spend it in the same way while being in Canada. A lot of my European friends like to hold US dollars as well. Some of them like to hold Bitcoin and spend from Bitcoin. All of those are available with the Crack Card very easily and simply. And you can just choose your order. You can just pick which assets you want to spend from first within your account. So for me, that's the big differentiator, but absolutely important that we offer rewards that are at the same level or higher as anyone else on the market. And that 1% we have in Europe and the UK is, and we'll bring a card, with the percentage that would make sense for the US when we launch that over the coming months.
And is 1% not low for cashback? You're saying
it's not in Europe. So we're only in Europe and the UK right now.
Understood.
One of the weird quirks about cards is that if you're a US card holder, you're used to probably things like
3 to 4.
4%.
Yeah.
Expect the Crack Card in the US to have that. The interchange fees, which fund those things, are different in the US versus Europe and the UK. They're actually capped in Europe and the UK at a much lower level. So 1%, while it sounds quite a bit lower, is actually market leading within the UK and Europe as well. So that's the percentage we have there. We'll probably continue to find ways to grow it over time. And then when we launch in the US over the coming months, expect to see something much closer to that 4%.
Yeah, it makes sense because there's lower fees on the card transactions over in Europe. There's lower cash back, but over in the US, higher fees, higher cash back. It kind of balances out. I wanted to ask about how we might see having multiple products here all under one roof tends to create some network effects. And I can sort of picture like some different reward mechanisms, like having X stocks and Crack Card and this on the Crack Money app. Almost imagine like rewarding people with X stocks, right? If they want to do almost like an Acorns like used to do, where you invest a little bit at a time and you kind of roll over, you round up your card transactions into a stock, in this case a tokenized stock. what are some of the network effects or synergies between products in the Kraken stack that you could see coming up as a result of integrating these?
Yeah, so it all starts from that Kraken platform that I said originally. We have the safest place to store your crypto, with 400, 500, 600 now assets under the hood, and more coming with X stocks growing each and every day. That then allows us to take so if you can move those assets from anything to anything, you can move them in and out of fiat in 100+ countries, and you can access them within an app like the Crack app or in the Kraken app. We have lots of things that we can do. First, you can spend from all of them out of the box right away. You can have the app. You don't have to go country by country to get a banking license, because we have the licenses that we can use in countries around the world. The Crack app is in 100+ countries right at this individual moment. You can sign up from any of them. And then, yeah, lots of different pieces. So we're going to play with those kind of rewards. We'll probably play with accounts for kids over time, the ability for them to stack sats or stack stocks, and learn how to save over time. We'll talk about launching different kind of reward mechanisms. Right now we have crackbacks, which every time you send or receive once a day, if you send and receive from someone, you'll get a random crypto token. So we'll offer those, continue to offer those. Just lots more coming over time. I think we're listening to users. We're trying to expand thoughtfully for what they want. But just the fact that out of the box, you get equities and crypto and stable coins and fiat and 7+ currencies all available to you in 100+ countries, I think is something that's really special.
Yeah. I mean, Mark, everyone's excited for Kraken. You got a big year ahead. You've got rumors of IPOs. You've got this ink product that has came out and started to really kind of be popular. You've got a new perp text there, NATO. People are excited about that. People are rumoring Kraken tokens, Kraken stock. What is it like internally right now? How are you guys preparing for 2026? How's the kind of energy in the culture?
Yeah, we're the opportunities are endless. We have so much to do, and so every day just feels like we're behind. At the same time, we're building so much. We're excited about all the areas we're investing in. We've got a brand new app called Inky, which is a more gamified trading experience coming out today. So lots and lots of things coming out every single day. We're really, really excited about everything that we can do, but also really focused on continuing to build the best darn experiences we can for users. So pumped about everything that we've got going on. And just like a huge responsibility on our shoulders to keep building all the things that we want to build for consumers around the world.
Inky, heard it here first. Mark, when you're ready to take it easy, have some fun, and kind of zoom out from the crypto world, what do you do? When you kind of step out of the crypto echo chamber, what do you like to do to have some fun?
Who has time for fun? No, to be honest, no. Everything we're doing is fun. So I flip from one app to the other. Actually, what do I do in the evening? I scroll through the Kraken app or the Kraken Pro app, and I try and find bugs. So that's what keeps me busy 24/7 nowadays. And but that's totally cool. So,
I love it. I love it.
Awesome. A fellow Canadian, Mark, it's a pleasure to have you on the show today, man. Thank you for joining us. Congrats on the Crack app. Congrats on the success. It's really been awesome to have a renewed regulatory presence in the States, allowing for, as they would call it, innovation exemptions. And I think that Kraken is a perfect example of, just sticking through the craziness from the regimes and being able to just be nimble enough and survive. So it's full on cockroach mode here in Survival City in crypto, while at the same time it's tokenization mania, Wolf of Wall Street, New York City. I'm not selling vibes happening as well. So you're at the forefront, Mark. So man, keep it up.
Hey, thanks for having me, guys. Really appreciate it.
Thank you, Mark. We'll see you next time.
Alrighty, man. Fun segment there.
I'm not effing selling, but you did sell.
Oh, I'm about to buy uranium, buddy. I got a multi-decade portfolio strategy. We're gonna take a quick break here, guys, and we'll be right back. See you guys soon.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more. Bada bing, bada boom. Fun stream, man. I'm recovered from Art Basel, fully ready to get back to it. 2 weeks to holidays. It's like 2 weeks to holidays, but it's like it feels like less.
How high does the ball bounce?
I don't know, but I'm not really even worried about it, man. That's the best thing ever. I don't even care. Like I'm so long. We have so many venture bags, and if it goes up, I'm happy. If it goes down, I'm happy. It's good, man. Good place to be.
I think that is that's a great place to be.
But it is looking pretty. It looks good, but then you look at the weeklies and you're like, okay, long way to go.
It's pretty uncertain out there, so it's a good place to be. Take some long-term convicted bets. Don't do anything too much in the short term. Just stay cozy.
Yeah, I mean, I think people appreciate a nice little bounce. People have been kind of yelling back and forth at each other on the timeline for a while. Yeah, man. I mean, Tom Lee just bought a ton more. They're $400 million worth. People are going to start calling for all-time highs. We'll see, man. It'll be interesting to watch.
Hyperliquid underperformance is something to keep an eye on.
I think it's a combination of unlocks, of new perps coming out. But these things tend to work themselves out in a way.
How do you mean?
Like, oh, it's underperforming, and then all of a sudden the DAT starts buying $100 million over like a week. So it's like these things tend to work themselves out. But it's also underperforming because it's overperformed or outperformed for so long.
Right.
It's like kind of like so. But yeah, man. Guys, great stream today. We'll see you guys tomorrow. We got a full slate this week. Thanks for watching Rollup TV. Big vibes.
We'll see you next time.
I got Miami in me still. See you later, guys.